Hello and welcome back to the Girls Are Investors podcast. Today's episode is a special one. We're doing a Q&A, so we've asked you, our students, to send in your questions about the investment management industry, and we've got some of our industry volunteers to answer them. So you're going to hear insights from Rick Eling, Managing Director at MKC Invest, Ellen Broek, Managing Director at Aurorae, and Natasha Braginsky Mounier, who is one of our GAIN trustees. They've kindly recorded short clips from their perspectives answering your questions, so let's jump in.
Hi, my name is Anushka and I'm currently a student at King's College London where I study economics. I have taken part in a lot of the work experience programs here at GAIN, and my question is, markets are increasingly data-driven and efficient, and in that environment, what do you think allows the best investors to still succeed over the long term? Thank you.
And here's Ellen's response.
So in private equity, you invest for the long term. You buy a company, you usually hold it for about 5 years, and then you sell it again. So you have a long time to impact a company and to make changes. And if something happens that will have a short-term impact, you will probably try to immediately find out what is going on, how it's going to impact my customers, how it's going to impact my pricing. Do I use oil as an input, and will that impact a company? Can I replace a product? So you will do a lot of research and try to improve that company and make sure that the shock is the least impactful possible. And then when you're at the point of buying and selling and a shock happens, usually you stop the process or you take a pause, because private equity sales processes can take weeks or months. So it's not strange that if something serious happens, that you stop the process. Everybody steps back, sees how it will impact the company and therefore also the pricing. And then only when you have more clarity will everybody come back to the table. And then the pricing will also match better, because if there's a lot of uncertainty, buyers will want to take an extra haircut just to be sure that they don't do anything wrong if it turns out to be a big shock. And sellers obviously don't want to really reduce the price if it might be something that will blow over pretty soon.
Our next question is quite topical. Here it is.
Hi, my name is Cassiopeia, and I'm currently studying accounting and finance at City St George's, University of London. I'm also part of the GAIN Student Advisory Board. My question is, when markets become more volatile due to geopolitical or economic events, how do professional investors identify genuine long-term investment opportunities rather than short-term market reactions?
And here's what Natasha thinks.
What a great question. How do investors deal with uncertainty and volatility? At times like these, when we are struggling to keep up with the bad news from the Middle East and energy prices and geopolitics, it is hard to keep a long-term perspective, but it's actually a great opportunity to become a real investor. The first thing you have to do is get away from scrolling the headline news, because predicting the headline news is very draining and time-consuming and not beneficial for making long-term decisions based on the fundamentals of a business. What you need to do is find a framework that works for you and use it. I'll share with you what works for me. One thing is to zoom out instead of freaking out. When volatility spikes, this is the moment that you study history and you look back to see what other episodes in time were similar to this and what happened after. Most of the time, I find that markets bounce back much faster than people expect. If you think about what happened during COVID and markets dropped something like 30%, they bounced back very, very quickly. It was, in fact, an excellent opportunity to add to growth companies and fundamentally sound businesses that had been more expensive before that. Secondly, check the business. Don't listen to the buzz. The headlines can move prices in the short term, but the underlying fundamentals of a business is what you really need to focus on. And if you think that they're solid and the valuation was attractive even before the turbulence, it could be an even better time to add to that position now. Thirdly, you must diversify. Investing means taking risk. The point is not to avoid risk, but to not be exposed to the same type of risk across your whole portfolio. So at times of volatility, take a step back, review what you've invested in, and think about the different scenarios that might be possible in the future and how the risks correlate in those holdings. You want to understand your direct exposure to risk and your indirect exposure to risk through understanding the correlations. This is how experienced investors stay disciplined when the world feels noisy. And I wish you the best of luck. Thanks for your question.
Let's shift to one of the questions that often comes up to us here at Gain, and it's to do with location. A student might ask us, hey, I'm not based in London. Is it possible for me to work in the investment management industry? Here's what Ellen thinks.
That is absolutely possible. So there are, for example, pension funds and endowments that are all over the country. There are also companies that help wealthy individual invest. Those are also based outside of London. And obviously, London is the biggest market. But if you try to apply for a job outside, there might also be less applicants. So it's not that just because there's less jobs that it should be a lot harder to find one.
Another question that comes up time and time again is about academic background. We often hear things like, I don't study maths or STEM subjects. Will investment management companies still be interested in me for grad roles? Here's what Rick thinks.
For me, that's a huge yes. My degree isn't maths or STEM, it's English literature. And one of the things that I've noticed in looking at graduates for junior roles in my firm, MKC Invest, is that the ones with arts and humanities backgrounds are A, often overlooked, and B, have a huge amount to offer. I find that people with an arts and humanities background, obviously individuals are different, but talking about broad trends, are more likely to be able to argue. They're more likely to be able to formulate a case, to do something, to buy, to sell, to analyze. I find that they're good creative thinkers. And I find that particularly people who've studied economics at university tend to be a bit too rigid in their thinking. Now, I'm generalizing. Obviously, people are different. But I would never overlook somebody with an arts or humanities background because I found that they have a tremendous amount to offer. I've just taken on somebody who was an intern with us 2 summers ago, and she's graduated in visual culture from UCL. And she is one of the most talented young fund analysts I've ever met. So her lack of a maths or STEM subject is no barrier. Her ability to synthesize lots of different ideas from lots of different sources, to think about them creatively, and then confidently and forthrightly make a recommendation makes her very, very valuable to our business. So in short, if you're not doing maths or STEM, don't worry. I think any serious investment management firm should give you a look.
And our final question is one that every student or recent graduate wonders about at some point, and it's this. Is it normal to feel a bit out of your depth or inexperienced when you first start, and how can graduates deal with that? First, here's Rick.
I mean, look, you are inexperienced, but strange as it may seem, we all were inexperienced. We all had a day one. I had a day one. And every single person out there, no matter how senior and intimidating they may appear today, they had a day one. And I think it's very important for leaders in investment management firms to understand that just because somebody is inexperienced doesn't mean they have nothing to offer. My firm makes a point of hiring young people alongside experienced heads, and we listen to the young people because they have a fresh way of looking at the world. They know things that those of us who are older don't know. They're from a generation that sees the world slightly differently, and we have to be listening to what they want to do, how they see the world, and allow their ideas and their ways of thinking to have space. So what I'd say is don't go into a new role and be cocky, obviously, because there are people around you who have earned their place over many, many years. But don't allow yourself to be pushed around either. Just because you're young doesn't mean that you have to suck up to someone who's been doing this for 25 years. You know, the culture in my firm is that the best idea wins. The best idea wins, not the person with the most time served or the most expensive suit or the fanciest watch or the loudest voice or the poshest background. If you have the best idea in the room, you win. And I believe we're not the only firm that operates that way. So when you join your first firm, listen to the people around you, learn from them, but hold your head up and believe that you have something to add to, because you do.
And this is what Ellen had to say.
Well, obviously, you don't know everything when you start, and that's perfectly normal. You were probably hired because you were smart and they think you will learn it. So I think the main thing is to show that you can learn. So try to figure out things based on what you already know. Try to structure your thoughts and then ask questions about things you don't know, and then you should be absolutely fine.
And that brings us to the end of today's episode. A huge thank you to Natasha, Ellen and Rick for sharing their insights. And of course, thank you to you, the students who sent in your questions. If you'd like to send us a question, we'll pop a link in the episode description where you can do just that. And before we wrap up, I just want to signpost gainuk.org as a fantastic place to start if you're curious about working in the investment management industry, about internships, graduate roles, or simply want to understand a little bit more about how it works. It's a fantastic place to start. Once you hit there, you can also sign up to the Gain student newsletter. And we send that every fortnight, where we share industry insights, career advice and opportunities from investment firms, where you can attend insight days and hear directly from them. So it's a great resource for you. Thanks so much for listening, and we'll catch you next time.